Yeah. Yeah, but again, hopefully this gives you a good overview, and then we're gonna, obviously build onto this. This is just the beginning to at least tell you what they are, and we're gonna build. Any other questions before I'll let Jeff take over? Feel free to ask, if you any question on just the general fundamentals or anything.
Okay. I think let's switch to Jeff.
Sounds good. All right, I will stop sharing, and I will hand it over to Jeff. Please.
Hello, this is Jeff Weber, and I'm honored to speak on OptionCircle, and I thank them for inviting me. My topic is going to be LEAPS. Well, first of all, what are LEAPS? LEAPS is an acronym for long-term equity anticipation securities. LEAPS are just regular options with two important differences. They expire on the third Friday of January, and they have more than 1 year before they expire. Currently, there are two LEAPS. The options expiring on January 14th, 2024, and the options expiring on January 17th, 2025. These have over 2 years before they expire. After January 14th, 2023, the 24 options are no longer considered LEAPS because they have less than a year before they expire. New LEAPS are issued in the middle of September every year. LEAPS, like all options, are very volatile. They can go up and down sharply. They go up roughly 5 to 6 times faster than the stocks they represent. I had one client's American Express LEAP rise from $3.45 to $12.50, and he had 3 sells on that option in 1 day with my AIM investing method I'll talk about later. Also, there are LEAPS on ETFs and even leveraged ETFs. For example, a good leveraged ETF is TQQQ that I use a lot. And also there's many LEAPS on low-cost stocks. I have made my own list of 2025 LEAPS because SIBO stopped doing it. So if you'd like a free copy of the roughly 500 LEAPS in existence for 2025, I'd be happy to send it to you. LEAPS, like most options, as was explained earlier, they cost roughly an average of 25% the cost of the stock and 5 or 6 times more volatile. Here's my history of AIM investing. AIM investing, AIM stands for Automatic Investment Management Investing, is a contrary investing method invented by Robert Lichello in the 1970s. You buy low and sell high, and 100% of all sells are profitable. Thank you. Showing that slide.
Want me to share this document? This is the right document to share, Jeff?
That's it.
Okay.
Okay.
Go ahead.
Okay. Oh, maybe place the Merck spreadsheet I sent you up.
Okay.
AIM is done using a 13-column spreadsheet, which is very convenient because it fits on an 8.5 by 11 sheet of paper. This is a sheet for Merck, the January 24 strike 100 call. You can see you started earlier, and I've changed probably from an older strike price to a newer one. You started with 11,700 back in December 7th, 2021. You can see less than a year later on 11/28/22, that 11,000 has grown to 39,095. I'll explain a little later how you do these calculations. But in essence, you can just quickly see you originally bought it at $5.30. When it went to $8, you sold 4 contracts for nice profit. Okay, from $8, it goes back to $5 on my birthday, as a matter of fact, June 13th. You buy 4. Well, here's the essence of why AIM works. Literally 2 weeks later, it goes from $5 to $9 and you sell 4. So basically you're using LIFO. You bought 4 at $500. You're selling 4 at $900. In 2 weeks, that's a $400 times 4 profit of $1,600. Then you had 2 buys, but again, it bounced back. You had, and you did what I call the AIM hat trick. You had 3 straight sells in a row. So you see by looking at the LEAPS price column, just how quickly LEAPS prices can go. Now, what you see at the bottom is interesting. This, I don't have that information in because he sold all of them. But down here at the bottom, every one of those buys and sells you see, I had a price down at the bottom for my investor to use. And we always use limit buys, so we will never miss a buy or sell at the price we want. So now I'll go back to it. So I got my start with AIM in BC, before computers. I was an auditor with the US Army in Seoul, Korea. I had access to the 15-column green auditor spreadsheets we used before computers. I picked out 60 stocks. I had saved my monthly issues of Barron's, and I wrote down the prices for 3 years and sat there with my pencil and did AIM for 60 stocks for 3 years. That's a great way to learn AIM. By doing the 60, I began to figure out which stocks, because back in the 80s, you didn't have LEAPS you could invest in, so you had to do it with stocks. I figured out what stocks worked the best. Well, that gave me ideas, and I wrote my own first book called I Guarantee You Will Buy Low, Sell High, and Make Money. And I have a PDF version of that book that I'll be happy to send to anybody for free, along with some of my sample newsletters. Here's the basics of AIM investing. AIM thrives on volatility, sharp upward and downward price moves, as you saw from that spreadsheet on Merck. Now, AIM was averaging 10 or 15% a year profit with stocks. Many people would be happy with just 15% a year over many years. And the beauty of AIM is that it is a long-term investing method. You should be using AIM for the rest of your life and averaging around 50 to 100% a year long-term. More on that later. I have in my model portfolio, I have a model comparing the dogs of the Dow stock portfolio to the dogs of the Dow LEAPS portfolio. Well, after 7 years, the dogs of the Dow stock portfolio is up 103%. Most people would be happy with that. But the dogs of the Dow LEAPS portfolio is up 547% over the last 8 years with the same risk level. And one of my original LEAPS portfolio, I call it the in the money portfolio, is up 1,868% over the last 16 years. And that includes the 2 years of the financial meltdown, which really helped grow the profits because you had so many tremendous buys in 08 and early 09 before the bull market returned. Here's a quick example of how AIM works. You pick out a good LEAP to start with, and I'm happy to suggest some that I like. You want to start with a minimum of 15 contracts, and now you're buying the 2025 LEAPS. let's say you buy 20 contracts at $10 an option or $1,000 a contract. And remember, you can't ever buy options. You must always buy contracts. And the standard contract always has 100 options. So you buy the 20,000 worth of LEAPS. AIM strategy then says place 20,000 cash in your account so you have money to buy when the price goes down. And anytime you sell, the proceeds go back into your cash account. So as time goes on, both the LEAPS value and the cash value go up. So you always have a built-in emergency fund, which is great. Here's an example of the first buy and sell, which you would place at the bottom of your LEAP. I found that the basic buy and sell strategy should be 25 to 30% lower for your buy and 25 to 30% higher for your sell. In our example, since you bought at $10 the 20 contracts, your first buy will be at $7 and you buy 6 contracts, and your first sell will be 3 contracts at $13. After any buy or sell, you readjust the algorithm and place your next limit buy and sell. After any buy, your next limit buy and sell will be lower. After any sell, your next buy and sell will be higher. You constantly lower your break-even point when buying. And we always use limit buys and sells so we don't miss any buys or sells. And I'd be glad to give anybody a free consultation to talk about my AIM investing method. AIM is very flexible.
Hey, Jeff,
Yes.
quick question. Like which document do you want to share? The strategy one or any specific?
Leave that one up. That's good.
All right, continue then.
Okay. After a really bad September on my call model portfolio, I decided to see how AIM would have done with puts for the last year. And it's very easy to look up the pricing history of a LEAP on Yahoo Finance. So I back tested for the year from October 21 to October 22, these 10 top of the line stocks. And you can see over the last year, if you had done puts with AIM, you would have made a 91% profit when most of the people who had calls or owned stocks were losing their shirt. So the flexibility with AIM is that you can go from a put to a call very quickly. I love the analogy of it's a lot easier to turn around a speedboat than it is a battleship. And you're in a speedboat. So right now, I follow the market quite extensively. I see lots of bearish sentiment out there. One top economist, Mohammed El-Arin, says we're not just headed for another recession, but a profound economic and financial shift. Bank of America sees the Standard & Poor's 500 to be the same as now at the end of 23, no change. So I'm advising my clients to seriously think when they roll over, because now is the time I'm having many of my investors roll over from 24 LEAPS to 25 LEAPS, that they should seriously consider buying puts for now until we really feel the market has turned around. Again, LEAPS are issued about the middle of September, and the basic AIM strategy I use is you'd be buying the 25 LEAPS now. Well, in about a year, the 26 LEAPS will be out. So that means you can roll them over from 25s to 26. Give you an idea why I think that's a good idea. I've had Apple LEAPS in my model portfolio for 16 years. Believe it or not, they are up 27,000% because AIM makes you high profits, and every year when you roll over, you have a lot more money to roll over at the 50 to 100% profit level. So after a few years, you start making astonishing profits. And the beautiful thing about AIM, you can do it once a day. I recommend it when the market is closed. You look and see if you had to buy or sell. If you're doing it yourself, update your spreadsheet with the buys and sells. If you're doing it with me, tell me. I will update your spreadsheet and send it to you, and strongly urge you to put in the next buy and sell that evening, so it's with your broker in the morning before the stock market opens. Now, the only negative about AIM is that all of the profits you're making are short-term capital gains. So I advise my clients that the best way to do AIM with LEAPS is to open a Roth IRA and trade within the Roth IRA. That's about the end of my presentation. I look forward to telling you more about LEAPS and AIMs every Wednesday evening on future OptionCircle meetups. Thank you very much for listening.
Thank you, Jeff. As we are top of the hour, any questions from the audience? Any specific things you want to ask from our panel? We have Jeff, Shishu, Sandeep, of course.
Sandeep, do you want to ask any questions to Jeff about some of the AIM methods, maybe, so audience can understand a little bit more? So, Jeff, from my side, the question is, you're actually selling LEAPS as the stock goes up, and keep buying as it goes down, but you have a strict price point in mind, that this is the price point that you wanted to buy, and
Right. Yeah,
you probably have the range, right?
The price, I use roughly, like I was saying, the 25 to 30% lower, and then 20 for the buys, and 25 to 30% higher for the next buy and sell. I found that generates a lot of trades, and you can see from that Merck spreadsheet just how many trades you have. And an ideal LEAP for AIM is one that has about an equal number of buys and sells.
Sure. Do you normally do the same strike price, or you actually keep rolling over to the next one if it goes up?
No, you keep the same strike price for the whole year.
I see.
So you're going to keep the same strike price until you roll over to next year's, or there's other circumstances I find where it's a good idea to roll over. For example, AIM works best when you have 15 or more contracts. I've had several investors who had, like you saw in that one example, have like an AIM hat trick where they get 3 straight sells. When that happens, it gets to the point where maybe you only own 10 contracts. I found 10 contracts doesn't work very well. So if you started with like 25,000 and now you have 45,000, I tell the people, when you get to the point where you have 10 contracts, I'm going to give you a normal buy for whatever number AIM says, roughly 20-25% of what you own. But I'm going to change the sell information and say you're going to sell all remaining 10 contracts if it hits the new sell price. When that happens, and it just happened on Merck, as you saw there, now my client has started with 11,000. Now he has 39,000 to roll over, and we rolled over to a little higher strike price on Merck. So now he owns 18 contracts, and we're doing regular AIM again.
So, Jeff, a question: do you buy LEAPS near the money when you purchase, or
I prefer ones near the money or slightly in the money. Now, on certain ones, I like to tell people, I said, there's the ideal world and there's the realistic world. A lot of times I have to go a little deeper out of the money than I like, because my client doesn't have enough money to buy 15 contracts at a price closer to in the money. So, but if it's really too wide in a spread, then I just tell my client, this is not a good lead for you to buy. And we have 500 other ones we can look at. So I try and gear up by asking my people, how much money do you want to spend? I get an idea on that. And that gives me an idea of the type of leaps I can look for to recommend to them to buy.
So Jeff, there are a few questions in the chat. One question is, do you buy leaps puts when this make sense?
I recommend, like I was saying, I recommend buying leap puts when you see an extreme bear market. And I actually got the idea to do the update and check and see how puts would have done for the last year. In September, that in the money portfolio I was telling you about was up 2,500%. In September, that portfolio dropped 540 points. So I was beginning to think, I said, well, I don't want to keep losing all the profits I've worked hard for 16 years. So I decided to test and see if it would be a good, move to make a 180-degree turn and see how puts would do now in this current market when I see so much negative sentiment from analysts everywhere. It's like, it's like the second coming of the Great Depression or something, the way you hear analysts talking. Oh. So I figure it's good to pause owning calls and go to puts rather than continue to see the market drop on a regular basis.
So there are a few other questions. So one is, how do you identify the ticker to buy leaps?
How do you what now?
How do you identify the ticker symbol? Which stocks to buy leaps on?
Oh, well, that's a good question. The first rule I have is I look for stocks that are at or near their 52-week low. Because why would you want, that way the leaps will be cheaper too. And I look at how much money my client has. If they have personal preferences, I look at their preferences and see if I like them. I look for leaps that have at least, when you're looking at the 2024s, had at least 1,000 open contracts. Now, the more popular ones, I think the biggest one out there, look at Ford leaps if you ever want to see. And I think Ford has the only leap I've ever seen besides General Electric that had more than 100,000 contracts owned. And again, I do the same thing with the leap as I do with the stock. If the stock is near its 52-week low, I want the leap to be near its 52-week low. And I can easily find that out by looking on Yahoo Finance.
Or our platform.
Yeah, our platform has it. Yeah, I'm showing, yeah. So you can actually find stocks that are actually below their, again, if you guys can see, we can actually click on this leap options.
So that's great, I would be looking at your 50% down
right?
to pick new ones.
Exactly. And you can do it across S&P 500. You can do all stocks, by the way, guys, or anyone. So it's great that we have it where you can actually look up the ones that are down 50% off and buy whatever you want, all ETFs, or whatever you like. So it's great. And you can actually do further analysis, which we'll explain later in going within it and kind of compare stocks to options. But great. Thanks. Right. Yeah, that makes sense, Jeff.
So there are a few other questions as well. The question is, do you sell shorter dated calls and puts against the long, or just leave it as it is?
I keep it simple. Most of my clients can barely, have a limited knowledge on options. So, and they're very busy, and it's hard enough to get me to have them tell me they had to buy or sell. So what I've adopted, instead of, flipping over to puts quickly, I came up with two strategies on the buy side. So I'll give you a quick example on that. On that first stock, let's say you bought it at $10. Okay, your first buy would be at $7. Okay, that buy happens. Well, your next buy, I probably would make about $5. let's say that buy happens. So now your leap has gone from $10 to $5. Well, for your next buy, which is your third buy, I'm going to use my bear buy strategy. And that's real simple. So people can remember it. If you bought it at $5, your next buy is going to be at half that price, or $2.50, and you're only going to use 1/3 of your remaining cash. By using only 1/3 of your remaining cash, you can never run out of money. You never have to add more money. So let's say you make that buy at $2.50. Okay, and it's still going down. Well, half of $2.50 is $1.25. Now I'm going to invoke my super bear buy strategy. I'm going to tell you buy it at $1. And you're still buying an amazing number of contracts. And I'll give you a good example of why that works. I had a client in JD. It had gone from like $14 to 53 cents in a year. You know, he wasn't too happy. I don't blame him. Well, I told him, I said, you literally have such a little bit of money that I just recommend we sell all of them at a ridiculous price and see if we can get it. He had gone from owning 15 contracts to owning 95 contracts. That's what happens. But he still had cash left. Well, literally in a week, his jet option went from 53 cents to $3.50. Even though he originally bought it $14, he owned so many contracts he had bought so cheap following AIM that he broke even at $3.50 from an investment he started at $14.50. I've had numerous instances like that where a miracle can happen. They turn around, and you know, at that point, I'm looking out for my client. I'm telling you, we want to get out, and I'll do that on other AIM leaps too, and say, let's get out and fight another battle another day. You know.
Sagar, do you have a question? I see your hand.
Yeah, hi. I just typed the question in chat, but my question was, do you keep the buy contract size same every time the price comes down, or do you increase the number of contracts?
That's for me, right? Okay.
Yes.
Okay.
Wait. Could you repeat that question slowly? My hearing is not as good as I would wish it was.
Okay. I'm saying every time you make a buy, the position size of the contract, do you keep the same, like 15 every time, or you increase the size of the contracts?
Well, after any buy, I go down to the bottom. I have a two-part strategy. You probably didn't notice it in my spreadsheet. The top line will show the actual buy or sell. Below it, I have what I call an administrative line, where I correct the portfolio control amount, the cash amount, the number of LEAPS contracts you own. Then I take that information and I put it down at the bottom, like you saw in the example there, that's blank because he had sold all, so I don't have any data in there. And then I figure out what the next buy or sell will be based on the new information. So if he went from owning 20 and now he owns 25 contracts, well, that means he might have started with a $20,000 portfolio control. Every time you buy, portfolio control using AIM goes up 50%. So if he bought 3,000 worth of new LEAPS for that buy, then his portfolio control will go up $1,500. So then once you have that information down at the bottom, you can easily figure out what your next buy or sell will be. But roughly it's going to be every time the buy is going to be 50, 20, 25, 30% lower, and the sell is going to be 20, 30% higher. And you're the same thing with, so if you own like 25 contracts, you're looking to buy or sell roughly 5 of them. You're not trying to buy or sell all of them, because one of the other features of AIM, you know, and I'll talk more about this in future weeks, is there's a great feature called SAFE, which is always equal to 10% of the amount of the portfolio. So if your LEAPS are worth 20,000, well then SAFE is 2,000. So if you get a buy on the other end, it says the buy is for 6,000. Well, that's only advice. Before you have you determine a market order, you take the advice amount of 6,000, and then you subtract the safe amount, the 2,000, and then AIM is telling you buy 4,000 worth of LEAPS.
So Jeff, sorry to interrupt. I think we are way over time.
Okay.
What we can do, maybe for everyone, we can do another session, just focus
Yeah, we
on
can talk about it next week. Yeah.
and then that way we can go more deeper, because there are more questions typed in. So I'm going to save these questions for next session.
Yeah.
And you know, like the questions are, how important is the technical analysis, stocks like Kavana and Shopify. So I don't think we can cover all the questions in this session. So we'll have a dedicated session on LEAPS and maybe go deeper on the strategy and these questions. So Sandeep, do you want to wrap it up for today?
Yeah. Quickly, I put in the link for our OptionCircle channel or Telegram channel. Please join that if you haven't already. It's in the chat. Join that because we're going to keep, you know, up to date there. And also we're going to hopefully ask Jeff if he can maybe post his, you know, things that he wants to share there so people can access it easily. So please join that channel, and we're going to put the materials there as well, and the recording from today, and continual information. So please join our channel. We have a YouTube channel as well. And then
Twitter as well.
And Twitter, please, OptionCircle, very simple. Please, you know, follow us, share with your friends. We really want to build this community up. And then lastly, you know, you know, if you want to try out our group, the great part about our group is that you get access to all the data, etc., and it's endless. And we're adding so many features. And the second thing is you get access to our private group where we're sharing ideas like insane all day, and we're able to answer questions and share. So join that. It's not that much, and we're actually doing a special 50% off all subscriptions for the holiday. So you know, you can join it and try it, and if it doesn't work, all good. But it's you know, it's $49 a month for the lower plan, or $99 for the plan with all the bells and whistles. But any plan gets you access to our private channel and also our midday calls, which I think are amazing. And then, you know, we're going to do these sessions too, but any paid members also get educational materials on options and all that stuff as well. So there's so many features. Try it out.
I would like to add, so they say, you know, trader's life is very lonely. So the whole purpose of OptionCircle is don't be lonely. Join the group and share the ideas. So you're not lonely while you're trading. That's and right. Getting stuck in a hole where it's hard to come out.
Yeah.
So
I'm very lonely most of the day in my center doing all this stuff, I have to tell you.
You don't have a lonely life of trader.
Yeah, we enjoyed the outlet of just having people around. We make money together, we lose money together, we have fun together, so it's all good. You know, we you know, pain and glory, we get it all. You know, that's how it goes. and thank you for your service, Jeffrey. We are very, very grateful for your service to the country.
You're very welcome.
Yeah, that's amazing. Yeah, it's very
thank you, everyone. I know we all the questions. I'm saving these 3 questions. So probably when we do the next dedicated session on LEAPS, we'll cover these questions.
Are you going to send a link for that private channel to everybody, or do we just go to the OptionCircle.com and look?
Well, I put it in the chat. I don't know if everybody can see it. It's in the chat, and then if not, at least Jeff will get it to you as well. But yeah, it's in the chat. Anybody, please join that channel, and then, you know, give us a shot, and, you know, try us for, you know, a little while. And
I mean, if you don't mind, I'd love to post, you know, how people could get my free first book, and it'll give them a great introduction to.
Please.
Okay.
Absolutely. Yeah, we'll get with you to give you the link and all that. Yes, absolutely. And we'd appreciate that. Thank you. Feel free to share anything you like there, because it helps the community.
All right. Yeah, because I want to help as many people as I can, because life is tough and we need each other to help each other to get through it. And I always tell people, if you can only have one side hustle, make it investing.
Yeah, agreed.
Thank you.
All right. So with
Everybody-
that, let's close today's session. And like as I say, recurring session every Wednesday, 6 p.m. Pacific, 9 p.m. Eastern. And we'll talk again next week. Thank you,
Thank you all.
everyone.
Thanks,
Thank
everybody.
you.
Thanks for your time, everybody. Thanks.